Hi, this is Kim Watson. Welcome to Monday Update on the 3rd of August. Okay, a little bit late coming out this evening, but anyway, I wanted to cover a subject that I was asked about regarding correlation. So I thought no better thing to do than to do it on part of the weekly update. It's quite an important thing, and it gives people a better understanding of the entwined markets that we trade in. What I started off with really is a weekly view. We'll split this down, and at the moment, this weekly view is showing the Globex futures, the E-minis or the S&Ps, and it's showing it relative to the 10-year notes. In normal times, what we generally get is pretty much what you're seeing here in terms of when the S&Ps are running upwards and the equity markets are going up. I'm saying the S&Ps, but the equity markets in general, you get a decline in bond rates because money comes out of the bonds into equities. What we've been seeing more recently to some degree is a move the other way slightly as the markets continued. This is on a weekly view, so it's quite big. As the S&Ps have continued pushing towards new highs, we've seen the bond market move a little bit. Now, part of this, and particularly this more recent sort of move up here, is based on the fact of the possible interest rate increases. What we've got to remember, normally we see these sort of markets moving pretty well correlated, and this is why I put it over a sort of a longer period on a weekly basis. And we generally see this as a correlation. So this is one of the correlations of the markets, and it works through most currencies and their main indices. So if this was the FTSE on the top here, we would expect a similar thing with the bond market. UK bond markets, we'd expect the FTSE rising, the bonds to be falling. When we start seeing the changes, there is often an earlier sign that some of the bigger money may be moving from equities into bonds, so or vice versa. So it's a sort of a bigger term guide as much as anything else. Of course, we can look at these, and I can come back and look at these in shorter periods. Let's just drop this down to a daily figure and move this also down to a daily. You'll see, well, there is a correlation between the highs and the lows quite frequently. It's not always completely clear, but they're relatively correlated. So it's one thing to be watching for. And the important thing to be watching for as we move towards September is there is the potential for interest rate increases, which is favourable towards bonds and less favourable towards stocks, as it reduces the cheap borrowing to a degree. Although at this moment we're in this sort of artificial zone where we're still at sort of historically low interest rates, and even if they were increased by 0.25, which is the most likely if it happens in September or later in the year in the US, and possibly the same in the UK later in the year, if these were increased, it's not going to have a significant change possibly on equities, but we could see equities easing a little bit and bonds moving up as we run through the year. Now, one of the other keys, but there's loads of correlations through the market, but I thought I'd show you the Canadian dollar. This is much more relevant to now. I'm just going to pause this and switch over. Okay, so what I'm showing here is a correlation between the Canadian dollar and the price of oil. I've just used the West Texas price of oil, but it matters little. This is based on a daily basis, and you can see that the correlation is extremely good, even to the dips. Everywhere you run across here, the correlation is particularly tight. Thing to bear in mind, whilst Canada is an exporter of oil, it's a major contributor to its GDP, etc., and also a lot of companies were involved within Canada and the oil sands. Now, as oil prices drop significantly, and we're sitting down towards the $45 here at this juncture, and as oil drops down to this, it gets to the break-even price of how much it costs to get it out of the oil sands. Even with the added technologies, it used to be about $30 a barrel was the break-even price, but I believe that's increased with the technology that's involved. And anyway, even if it was still $30, it would still mean that, well, there's a much smaller margin, so there's less profitability, and overall that means a possible problem. I say problem, but certainly not helping the situation in the Canadian economy. So hence we've seen a weakening of the, bear in mind this is the US dollar versus the Canadian dollar, so we're seeing a weakening of the Canadian dollar here. Other sort of comparisons that you can put on this include, I mean, you can put the Australian dollar on pretty much over the same sort of picture, but here of course it's it's Australian dollar stroke US dollar, so the correlation is a bit closer in terms of price and oil. But remember, Australia isn't just oil, and this is more, I could just call this, if I had a commodity index, you can throw the commodity index in there and you'll see that the Australian dollar would be coming down as the sales and the cost of raw materials are reducing as the demand drops to China. So the Chinese, I mean, if you put the Chinese markets compared to the Australian dollar, you would see a really tight correlation there. So this is more for looking at the bigger picture, I guess. One of the things that, with the Australian dollar, for example, I'm relatively bearish on it because I think the economies, with the situation and the problems that we're seeing and the slowdown with the Chinese economy, this is going to have quite a severe effect on the Australian economy, and consequently we'll most likely to see the dips down. So my preference generally, okay, on intraday we'll get rallies and we can trade those intraday rallies, but my preference and my bias sweeps towards the downside. One older correlation I just wanted to show also was the yen and oil. It used to have quite, I mean, because of the Japan being a total importer of oil, it used to have quite a as price of oil rose, would have quite a significant effect on the cost of manufacturing, etc., in Japan, and we would generally see quite a reasonable correlation. There is a sort of correlation sitting there, but not tight. In fact, it's inverted in places. It's not running to the way it used to, so it's one I couldn't really be looking at too much. So the more interesting ones is the Canadian dollar with oil, Australian dollar with any Chinese data. So it's really putting the two together, and of course looking at the indices and bonds. But as I said, the interest rates, and with the reduced interest rates, bonds may see a slight growth, but it's more likely that we'll see more of a plateau there than anything else. Okay, so let's have a quick look at the markets now, just to finish off with, and we'll just close. Sorry, I've just got another little file there. Close that down, and look at where we are as we run into the new month. No surprises. I've got the Canadian dollar on here. I'll talk about it. Looking at it from a daily perspective, we are pushing up to sort of new highs once again. These are significant highs going back. Actually monthly, you need to go beyond the months to actually see. Last time we were up in this sort of picture. In fact, now we've broken those monthly highs there, and you've got to go right the way back to the early 2000s to get anywhere near where we are at the moment. But the moment it's pushing up, there is the potential at some point this week, maybe earlier, I say this week, but this month, for us to come back towards the monthly pivot, which to me, if it did come back there, would only probably provide a buying opportunity, particularly if it came down towards with the 21 sitting around there. But I think it's quite unlikely we're going to see quite such a harsh move down, unless of course we'll see something with the oil situation. If oil suddenly shoots up in price, we could easily see this move down quite quickly, just as it's moved up quickly with the price of oil. In fact, I'll just flick the oil price on there if I can. Whoops, wrong one. And you can see oil slip down and keeps on slipping down at the moment, as well, basically surpluses are talked about, and there was even talk, I understand, of the US actually exporting or potentially exporting, but was a ban on that. I don't know if that's actually been discussed any further, but certainly that would only prove to weaken the price of oil even further. So At the moment, the Canadian dollar looks like it's coming back to the Canadian dollar, looks weak against the US dollar and could continue pushing upwards. However, any change, quick, severe change, that would be certainly a target to be aiming for and possibly just to buy from to see if we can push up again. Looking then at the euro dollar, much more of a choppy position. This is a bit, I mean, what we've noticed in the trading room the last week or so. It's so much more choppy during the day. If you look at intraday, we're seeing, in fact, I'll just run through the intraday here, and you can see just how choppy it was today. Quite difficult. Friday was a little bit easy, but that all sort of happened in a couple of hours later in the day. It's at 1 o'clock, 1:30, news come out, Bush it ran up and then retraced and pretty much carried on the same picture to where it was before. But we are seeing sort of quite choppy nature in the markets during the daytime at the moment. Not to be unexpected at this time of year. Also, one other thing to bear in mind there is the average true range now is again dropping down from the 150 points, 140, 150 pips we saw before, down to about 110, and really that's probably going to drop off at quite an accelerated rate at the moment. So looking at where it's sort of going, it's got a quite solid trend line across the highs here. That's any sort of break of that only may push it back with it and stay. I think we're most likely to stay in range if it drifts into that sort of area. It is just below its monthly pivot here. I don't think it hasn't quite hit it yet. So there's a possibility of it actually getting up and hitting its monthly pivot, of course, at some point. But really, if anything, it's looking sort of relatively weak. The shooting star, there's a potential for this to break down further. Now, can't just say, you see the sort of wedgy pattern that we're sitting in at the moment. We'd edged down over last couple of months, really. Bit of a rally towards the end of this month, but last month rather. But it looks like we could really continue from that wedge pattern to push downwards. Okay, looking at the pound dollar. Again, I mean, I drew this on this morning, I believe. And you can just see how choppy it is. And well, the thing is, it's been trying to get past this 157, 56.70 sort of area. If we see some sort of break beyond that, I think it might actually go quite strongly. So it could. I'm sort of looking at any sort of move up towards that as a possible buying opportunity to see if it will break through and get a bit more of a run. Alternatively, if it falls through the daily 50 here, well, we could be on for more of a move down towards the bottom of that range. But at the moment, you can see how tight it is. It's quite difficult, as I say, intraday point of view, choppy for many hours. I did flick down earlier this morning, but it dropped down and then it's consolidated again. We're seeing quite long, wide periods or long periods of consolidation. Dollar yen. Predominantly, again, is from a daily perspective, a sideward chop that has got the monthly pivot below us, which I would expect to see hit in this range that it's riding in. It could easily ride down to this range here, so any strength in the yen itself could see this running down, as I say, to that monthly pivot. Break of the highs will only look, well, I mean, there's only the potential of running back up towards last month's highs. It's June's highs now, so there's still a possibility for that to happen. But at the moment, very difficult. Again, it's one of those markets just chopping. You can see the range is dropping. The average true range has dropped to 76 pips. So it's just summer trading. Okay, and finally, let's have a look at the Aussie dollar. Having a real hard time with things, as explained, with the situation with China. Doesn't help with oil prices falling either. It's an exporter of oil, and we've seen this moving down here. Again, the ranges are dropping. The average true range is dropping to about 86 pips now. There is any sort of may get it overnight at some point. We've got news coming out this week, various news stories. We may just see a pitch back up to that monthly pivot. Of course, looking ahead into the news this week, which is quite important. There's quite a lot of key stories coming out this week. For the Aussie dollar, most significant figure, of course, is the 5:30 a.m. tomorrow morning, tomorrow morning, we'll see the cash rate and the RBA statement, Reserve Bank of Australia's statement. So that may create some volatility and maybe enough to run back up towards that monthly pivot. We'll see. But I think maybe it's expected to be left alone at 2%. But there was rumours and comments that there is room at some stage to cut it further if necessary. We've got what else is going to? Of course, the non-farm payrolls is the significant data coming into play as we run into Friday the 7th. So again, anything there that's a negative surprise to the US dollar could see this rallying back towards that monthly pivot if it continues to the downside. At the moment, I prefer to be a seller mostly. You see these days, we get one good up day followed by down days, a little up day, down days, and this is really, certainly the trend is to the downside. But I'd like to see, if it from a swing basis, maybe even a move back towards that monthly pivot. If it doesn't do it all in one go, it may be an opportunity to set up a short swing. Okay, that's it for me. I hope you have a great week. I'll be back later in the week.